Hi, this is Daniel, and you are watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Normally, I'm looking for potential multi-baggers, folks, types of stocks that could potentially go up hundreds or even thousands of percent. And today, we are looking at what I think might just be an exceptional company. It certainly has that hyper-growth part, and the valuation, looked through the right lens, might be reasonable, given that they're growing at a crazy clip. Today, we're talking about Olaplex, recently IPO'd. OLPX is the ticker, and I knew nothing about them before researching them, and now I'm aware, and it's like, whoa, seems like a first-class brand taking market share, potentially unrivaled. I'd love to hear your feedback in terms of that perspective in the comments below, and it seems like very interesting hair care brand. Let's dive right into it, where as we look, first of all, it has a very reasonable, very fitting slogan. What you're talking about is inspired by salons, proven by science. That inspired by salons part is a real key and interesting part that I'll get back to towards the end of this video, and I think reflects the crux of where they might have a strong value proposition. And so to understand where do they get their roots or what's their main value proposition, it's selling this thing called, like they talk about selling the complete hair repair system. And it's various different types of products that go around that, whether or not it's a shampoo or type of oils or conditioner or creams. That's all about improving or maintaining good quality hair. And, it's worthwhile to recognize there are riches in niches. When you find something that, the main competitive forces aren't as focused on, where you could say, hey, we're going to set ourselves apart either in terms of being a high-end brand or doing something slightly different than, let's say, the major competitors like Unilever, let's say a slower moving brand like the major, consumer goods businesses. What if you can set yourself as a niche saying, hey, we are the company focused on helping you build your hair back? And that's why their products are, they sort of start off with this product called a bond builder, which is all about repairing sort of damaged hair. And that was their first focus. And they said, look, we believe approximately 90% plus, 91% of US women do something every day to damage their hair, such as coloring, chemical services, heat styling, washing and brushing. And so their view is like, let's focus on this very particular niche. So that way women who are doing this, damaging their hair, they can say, oh man, this hair is really getting fried and thin. We need to build it back stronger. And that's sort of what you're going here with these bond building products. I don't understand the science of it, but I certainly understand the appeal, sort of saying, hey, I want lush and nutritious hair, and I just bleached it or something like that, and it's no longer as appealing and it's no longer as healthy. And they put up some first class metrics as you look at this business, talking about how stylists trust it. 76% of stylists believe Olaplex offers higher quality products than any other brands, and they're growing very quickly. Their growth accelerated so far in the first half of 2021, growing to about 171% versus the 90% growth that they posted last year. They claim to be the number one bond building brand in professional healthcare. Once again, focusing on that, there's riches and niches, folks. And as you continue to look at these metrics, these are first-class brand metrics. Strong social media presence where you see literally millions of hashtags to the Olaplex brand. The number one follower count on Instagram versus similar brands. That means they're leveraging their sales and marketing very intelligently. That means they can also squeeze out some really juicy profit margins because they're leveraging their sales and marketing so intelligently on social media. And they're also winning. Look, they're winning in very competitive marketplaces. Sephora, that specialty retailer, as well as Amazon, they're number one hair care brand in Sephora, they claim to be. And they're saying we're the top 2 brand on Amazon across our category. So they are winning in what I'd argue are very, very competitive marketplace, very competitive categories. And when you see a company taking share, there's no way the hair care industry is growing at 170% in the first half of 2021 or 90% last year. So when you see that, that means, okay, you're doing something right. You're doing something that sets yourself apart and means you're winning right now. So it's potentially unrivaled. The question is, what makes it durable? What means that they can continue to have that strong growth in the future? And I think that gets actually back to the salons, but I'll talk about that in a second. Now, how big could they grow? And they talk about how the global market is around $80 billion. And if they only capture something like 3% of this global market, the business could 4x from here, 4x plus. And honestly, this is sort of tricky to pencil out because that's a global figure versus their U.S. predominant business now. This is they really are operating in sort of the prestige, aspect of the market, focusing on a very particular niche, this sort of bond building. So, it's sort of tricky to say exactly what it could look at, but when you see a business that's rapidly growing, growing nearly 200% this year, 170%, 90% growth last year, you'd say, okay, a few more years like this, and you are talking about $1 billion business, multi-billion dollar business. So it's not I wouldn't say it's a stretch of the imagination to say, yeah, this business could potentially 4x from here. And honestly, it doesn't give really any credit to the secondary markets that they would consider exploring additional products, maybe moving beyond straight hair care into maybe skincare. And that's something that, they're considering exploring, especially sort of capitalizing on their social media presence, capitalizing on their strong brand recognition that they're building. And their approach to selling, I think this is really important. I'm going to dive into this right now in terms of they sell everywhere. So you see direct to consumer, and that's, selling online, let's say via Amazon. They sell specialty, where you're talking about the Sephoras of the world. And then they sell pro. And about 50% of their sales, it varies, are to the stylists and the salons. And I think this is a super duper important point. So I want to focus on this. So if you have a stylist that says, hey, you want an Olaplex treatment, or hey, you know what, you want to have your hair rebuilt, I trust these products. And this is what they take out. This is what they have on their top shelf. So that way, when the customers go into their salon, if you're a stylist, this is your bread and butter. This is your income. So you're going to use products that you trust. And so if 50% of your sales are to these stylists, it's not like something where it's like, oh yeah, we're going to use this product this week, and next month when you come in, we're going to switch it up. Because if they do that, then they're sort of betraying the trust that they're showing. They're betraying the trust that they're trying to build with the customers that go into their shop. Like, oh, actually, that product I was using last month, it wasn't any good, so we switched to this other brand. You're not going to see that. So I think you are going to get some sort of sticky aspect. This is sort of my read into the situation. And once again, I'm not a user of Olaplex. I know folks that do use it. And so if you are one of the folks that use it or know someone that does, I'd love to hear your thoughts in the comments below in terms of this video, as I look at this. And so that aspect of sort of focusing on the salons, the stylists, the professionals, and using that as sort of an indirect sales approach is really clever, really interesting, and a key growth driver of their business as we think about that valuation, and could potentially be a growth driver for years to come because you have stylists, you have professionals that are trimming and styling hairs around the world. So this could be something that you sort of lean into and saying, hey, more and more women are looking to, make their hair fancy, bleach it, dye it, whatever you want, but it's also damaging their hair. And yeah, you want to have that lush feeling. Your hair feels great. And so you know what? You got to fix it up. So you're going to use a bond building product like Olaplex. And that's where they're leaning into with these professionals. I think it's a really interesting angle that could lead to better durability and better sort of strength than folks might appreciate for a consumer brand. And so let's keep, diving in to sort of understand this business. And the next question is, well, okay, you're talking about a business that's growing quickly. You're talking about juicy margins. But what about valuation? Here it is. I'm going to do a quick plug. Or if this is your first time tuning in, once again, my name is Daniel. You're watching Unrivaled Investing. If you want to follow my personal journey as I try to call out potential multi-baggers or see what I'm buying for myself, go to unrivaledinvesting.com. First week of the month, I call it my full portfolio. By the end of the month, I try to call out a potential multi-bagger. We also have an online exclusive community at Discord where I'm interacting on a daily basis. And my view is just finding one potential multi-bagger can change your life journey. So if you're interested, follow my journey by going to unrivaledinvesting.com. And so in order to think about the valuation here, recently IPO'd, OLPX is the ticker. You need to understand both the growth and as well as some of the core risks. And I have an exclusive video just for Journey subscribers, how I think about risk generally, but I'm going to call out some of the core operating risks here. And one risk to consider is that about 70% of their sales come from one manufacturer. So that is a core risk I would think about, because does that mean this manufacturer could create an unpleasant competitive dynamic for them where they start sort of saying, hey, here's the bond building product that we have. Maybe we could offer something very similar to another brand that wants to scale or cut a better deal. So that, or there's a shortage, or there's just a problem with that company. So that is a potential choke point that I think about when looking at this business. Another aspect is their customer concentration, where they have 3 customers that each counted for greater than 10% of their sales. You're looking at Sephora, Salon Centric, and Beauty Systems Group that each accounted for more than 10% of their sales. So that means if for whatever reason one of them decided to say, you know what, we're not really looking for it anymore. This was in 2020. I'm not sure what it looks like, in the most recent months. But either way, when you have that level of concentration, if you have one customer that has a problem or just doesn't, has a change of heart, says, you know what, Unilever is going to cut us a better deal or cut better margins, and so we're not going to have this. You do have that sort of risk. I don't think it would really come into play given the fact that they are building a brand for themselves and the fact that stylists seem to love it. So this does. I don't think they're going anywhere, would be my expectation. Now, those are some of the core risks. Obviously, you want to check out the SEC filings to see the full risks section. But when you think about the valuation, you need to sort of say, well, what are they growing at? And here it is. Impressively, I already mentioned 170% growth year over year for the first half of 2021. But when you dive in, it's actually even more impressive because their growth is spread across their 3 different channels, where professional was 125%. Their specialty retail, like the Sephora's, grew 300%. Now, part of that might be, the reopening of the economy versus last year with COVID. But their direct-to-consumer, that shouldn't have benefited that much from COVID, I would think, because the reality is last year you were having online sales as well. And so, looking at this to see 174% growth in the direct-to-consumer, 300% plus for specialty retail, 100% for the professionals, this is just very, very strong growth, driven in part by new products, where they're saying new products contributed $47 million of their new growth, so a significant portion of their growth. And it's just impressive to see what they're doing. And it shows in their financials, where in the first half of the year, they posted 55% operating margins. That is super juicy margins. That said, there is a lot of debt. This is sort of coming off of a private equity deal where the private equity company is selling some of their shares. And so you are looking at a company that's pretty well levered with about $800 million in debt on this. So a significant interest payment, that's going to be due. So you got to make sure this company continues to operate with no hiccups, because, when you have that level of debt, any sort of hiccups are magnified significantly. So considering all these sorts of things, I want to do a full range of assumptions. Now, first, I didn't have 2018 sales figure. You have 2019, you have 2020, and so that's always makes it harder to value this. I used a fully diluted share count that's slightly higher than what you might see in other places. That's just based on my own conservatism, and I expect, after it IPOs, you see that dilution actually hit their financials. So of around 700 million shares, it might actually come out higher than this. It's currently around $25 share price, so that's a little under $18 billion market cap. Looking at 90% growth in 2020, looking at potentially 700 million in revenue in 2021. Really depends on how they continue to grow. The reality is second half could be even stronger than the first half, given some sort of seasonality where people like to make sure they look good for the holidays. And so, they want to spend the money to make sure their hair is nice and vibrant with the correct bond builders that they're using. And so I'm penciling out implied growth for the year of 130 to 180%. So around 650 million in revenue for the year to 790 million in terms of revenue. That is significant growth. I mean, that's huge growth, and I'm using optimized margins of 40 to 50%. Part of that's just due to the fact that, it's incredible to see the 55% in the most recent period, but these optimized margins, I want to factor in like how much you're paying in interest expense. I want to factor in, this is almost like a pre-tax margin is sort of how I'm thinking about for simplicity. I'm not showing the debt and all that sort of stuff here. Then slap on a 25% tax rate, and so you're sort of getting an implied forward multiple of 60 to 90 times, which for a company growing at 100% plus, might actually be quite reasonable. You look at the famous investors like Peter Lynch, and he talks about, hey, try to find things that trade at a peg of 1, price to earnings to growth of less than 1. And here it is. The growth is 170%. and the implied earnings multiple is, somewhere between 60 and 90 times. Now, normally I'd say, well, wait a second, 60 to 90 times is very expensive, but then it becomes a question of, well, wait a second, how fast do you think this business can grow in the years ahead? That is really the multi-billion-dollar question for this business. What do you think their sales could look like? Earlier in this presentation, I said, hey, they could potentially 4x their sales if they capture a meaningful enough part of this market. And look, they're already growing close to 200% year over year, so they're well on their way. And so, the question is, what's their growth rate in the years ahead? And that's where I could really use your help. If you have any sort of thoughts, share it in the comments below based on your own experience. I'm penciling out an annualized growth rate somewhere between 20 and 40% annualized in the years ahead. That implies somewhere to like 3 to 5 times their sales. So effectively saying, 2021, you're going to increase your sales by like 3 to 5x over the next 5 years. Maybe they'll do it. I don't know. I'm not close enough to the product. That does sort of create some uncertainty here where I just don't have enough comfort to say, oh, I strongly believe in this. This is a framework, how I'm thinking about this. Of course, it could go way higher, way lower based on how they execute. So a lot just depends on their execution. Are they going to prove themselves? And I think I'm using a very reasonable range of 15 to 35 times. So it's really a question, folks, of like, well, wait a second, if they're delivering on 30 to 40% growth, you would say, wow, 5 years from now, 25, 35 times might be quite reasonable for a nice cash flowing business like this with high growth. So, and part of it's like on the low end, assuming a 15 times multiple is like, yeah, there are these concentration risks either in terms of where they're getting their inventory or sales. Those are things to think about. So ultimately, it comes down to, are you a believer in Olaplex, OLPX? If you are, I could definitely understand why you would buy or nibble on the shares, buy it, sort of saying, I think there's potentially a couple 100% upside. And that's sort of what the back of the envelope here is suggesting, 200% plus upside, around 50% downside, sort of based on this sort of range of variables that I was just talking about. And so I find it interesting. I haven't bought it partly just because, it does have a sizable amount of debt and I'm not super close to the brand. I'm not super close to the product to think about like, well, are they going to continue to take share in the years ahead? Will these other competitors actually start encroaching on them? I think that would be tough for them to do, just given the fact that 50% of their sales are coming from the stylists, and those stylists, as I mentioned, aren't looking probably to change month to month. Those stylists, I'd imagine, are pretty loyal, sort of saying, this is what I treated you with last time. I'm going to do it again because I don't want to look like I'm just, flip-flopping on that as well. If you want to follow my personal journey, while Olaplex trades at what I'd say is very fair, potentially rich, depends on how they execute, multiple of 20 to 25 times sales. My past multi-bagger is from February. One of the potential multi-baggers I called out is a consumer goods business, a little bit more regulated, growing at 80%, so not the same speed, about half the speed, but doesn't have the same balance sheet risk. It effectively nearly a cash balance, much cleaner balance sheet. And it's similarly lucrative, but trades at 6 times sales. So I look at this and I'm sort of saying, this is part of the value proposition that I'm trying to bring with Journey subscribers is sort of saying, yes, you can find these fast-growing businesses, but let's try to find the ones at a compelling valuation as well. That's the goal. I mean, it's okay to find these unrivaled businesses and pay a full multiple. It's just harder because you might have to deal with sort of valuation compression in the years ahead. What if interest rates start rising, or what if just there's broader risk off and valuation multiples come down and offset that growth? So that's why I like to find companies where you sort of, from a valuation side, maybe you can actually benefit from it along with the fundamental core growth of the business. That's what I'm looking for, at least with my potential multi-baggers. That's at unrivaledinvesting.com. If this video talking about Olaplex, OLPX stock, has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up button. Thank you so much for watching.